what's changed the most in Chicago from an investment standpoint since you started? And then I want to know what you think about the future of investing in Chicago.
I think it's got more complicated, especially in the suburbs, even too, just with rental license and then just code enforcement and all the different laws that are now around Cook County. And Chicago's always had that same rental ordinance, but they keep kind of putting little layers on top of it. It makes it more difficult. But that everything I just said, I think makes it such a great opportunity. Because think about this, Kirby, where you have a lot of out-of-state investors here in the Chicago market. But where do they go? They gravitate. They're promoted. They follow promotions of these high yields on the south side, southwest side, south suburbs, and those are really tough to make money in long term. But in the meantime, you have the other 75% of the city and suburbs that there's just so much opportunity, and that opportunity comes from the people that are local. I think it's hard for the outside people to find these local opportunities. I think because of that, it kind of creates a moat around Chicago. I got a pretty good moat in property management. No one wants to come and buy a company in Chicago. No one wants to be huge in Chicago on the property management side because all the headaches. So it kind of creates this kind of moat around this area for us to do as much as we can, as fast as we can. Now, you have all the headlines and all that comes with that, but locally, I don't know, there's just so much that little corners of every neighborhood or every city that just has great opportunity for, called the next 25 years. And I'm not looking at Chicago and a 75. I'm looking at from anyone that's listening to this right now probably has a 20 to 35 year timeline. And the amount of money you can make in that time frame, you buy the right stuff, you're not gonna lose here at all. So,
yeah. So when people call you from California and they want to invest in Chicago, where do you direct them as this is what I would do if I was you?
Yeah, you know what? It's funny. It took me 15 years to do it, but I put together this little ebook, and you can find it on our website, where to invest in the Chicago suburbs. And it kind of talks about it's a handful of cities to stay away from, but then I talked about these little pockets. You got these great pockets in all these suburbs. You're familiar with some of them. It's if you're in Bolingbrook here, but you're in this corner, you get Naperville schools. Or if you're in this corner of Aurora, you get Naperville schools. Or if you're in this corner of Hanover Park, you get Schaumburg School District. There's just so many different little pockets. And then there's a lot of these housing developments built in the 80s, or it's these townhouses that don't have HOAs. They're not the prettiest, but man, they're way more affordable than single family, and you don't got to deal with HOA. So there's these little kind of pockets of those all around the suburbs. So I tell them, it's funny. It took me a while to kind of be real with myself about some of these south suburbs and the south side, where it's man, it's tough. Here's some fun information. We went back and we figured out what our real return was on all 482 properties for the time we held it. And there wasn't one that didn't have a double-digit expectation. But at the end of the day, everything figured out to about 7.73% was our return when it came to rent. Now, we're not counting appreciation or anything like that, but you see 15% cash on cash, 29, all those crazy numbers you see. We did it at a time where we bought the cheapest that anyone will ever buy in the world. In any of our lifetimes, and we still couldn't break 8 consistently.
Yeah, with your own property.
We took out a couple of the low life. So it's just kind of crazy to think about that. And that goes back to kind of man, would I have just been happy with a 5 or 6% in the suburbs?
Yeah,
an easier 5 or 6%.
Yeah. You've mentioned that there's headaches that come along with property management for those who haven't done it before. How have you mitigated some of those? What does your team look like? What does your team structure look like? And if you were to give advice to somebody who's interested in starting a property management company, what would be the biggest things that you've kind of learned that you would advise somebody?
Well, I'll tell you this. I think property management, anyone listening, there's so much opportunity in this space. It's a very young industry. And, up until 30 years ago, basically property managers just viewed as kind of degenerate realtors. Oh, you couldn't be a realtor, so now you're going to be a property manager. That's cute. But it's became a space in its own, and even more so since the crash, because when all these big hedge funds came in and bought all these houses, they realized how scattered and how mom and pop this industry was. So they started to put money behind the roll-ups, and there's a lot of roll-ups that have happened in recent years. But no matter what, it's becoming an industry in itself. And the funny thing is, I don't know, funny, but this the opportunity thing is, I guess, but it's only like 35 or 30, somewhere between 35 and 40% of investment properties are managed by professional property management companies. And the rest are all by mom and pop, or all by self-managed. Now that there's not enough property man, if that number ticked up 5%, there's not enough property managers around to cover that type of units. Because think about this: in Chicago alone, there's about 1 million in rental units. So 5% of that, like all of a sudden 5% of those came on the market and need management. Like we couldn't even handle all that.
Yeah. Yeah.
So there's so much opportunity in that. Now, if you look at one thing that I always share with people is in Australia. So Australia, they're about 20 years ahead of us in the property management space, maybe 25, 30 even, but they're much more regulated. So all this regulation that we're like, oh, it'd be horrible if it happened. That happened in Australia a long time ago. So they're in Australia, they're about 85, 90% managed by a professional property manager.
Wow.
And that's big business over there. So I could see, there's not gonna be less regulation in this country in 10 years or 20 years. There's gonna be more, and people still want to invest, but they don't want to deal with it. I mean, right now we get hired a lot of times just because people don't want to deal with the local rental license. They don't want to go take the 8-hour class for crime-free addendum.
Yeah.
So it's like, they'll hire us. I'm like, that's great. We'll do it. We'll take it. But there's just so much opportunity in the property management space. And I think it's such a low, I mean, all you have to have in Illinois is a broker's license. So it's a low barrier of entry. And there's certain advantages. There's certain advantages to being a big property manager and certain advantages to being a little guy too. So I think both sides can win. So if anyone ever wants to talk about that, I'm always down to encourage people to start a property management company.
Awesome. Yeah, I've sat through that crime-free addendum class a few times. So it's a long day. In terms of your team, though, what does that look like? Like, who are the key roles?
Yeah, so we have on our team here at GC now, we have 61 people.
Wow.
And that includes, we have in-house maintenance. So our maintenance team is made up, I think there's 13 of those people are maintenance techs and a couple admin over there. But yeah, we just have we manage right now about just under 1,500 units at about 1 million square feet of commercial space. So, the one thing about property management is it's very, you can only automate so much. Mm-hmm. And people are always like, how can we prevent these problems? And property management too, the reality that we have our team come down to is like, listen, no matter what, you can't prevent every problem. You can prevent a lot of stupid stuff that or not make sure you don't do something a second time like that. But no matter what, you spend your day putting out problems, and that usually takes manpower. And that's kind of the team that we built here.
Yeah. And are those 61 all local, or do you lean on a lot of remote?
Good question. So we're about half and half right now.
Okay.
Half local, half remote. But our remote team, it's the cool thing about remote people now is remote talent is they now have 5, 6, 7, 8 years of property management experience.
Yeah.
So you're not hiring someone that's never seen AppFolio or doesn't know what a lease up is. So like it's kind of cool where it's becoming even more advantageous for property managers to overstaff or have ample staff to service the residents just because there's so many people out there with great experience.
Yeah. Yeah. And our guests, we have always had a remote team as well. And our guests a lot of times just think that they're right down the street. Like they'll stop by and drop off sugar if they wanted. And, and they don't know that they're on the other side of the country or other side of the world even, so that's the great thing is if they're good, they can be good from anywhere in a lot of positions other than the ones that need to be boots on the ground fixing, those issues. But
we have a lot of them in Mexico, and Hispanic accent. Chicago is not rare at all.
Yeah.
But, yeah. Funny story. The first remote person I ever hired in Mexico, my main goal was to get someone to speak Spanish in the office. Hired them, onboarded them. They're like, yeah, no, I don't speak Spanish. I'm like, I just did not even think like that would even be a question I'd have to ask. But they grew up like on a border town, and they kind of went to English schools in Texas, kind of back and forth. But that was my mess up with my first hire of a Mexican remote team member.
You're the only guy who's ever hired a Mexican that doesn't speak Spanish.
Yeah, I know. I'm like, oh my gosh, like
that's hilarious. So I mentioned your podcast. You've interviewed a lot of people, a lot of really, really smart real estate investing experts on that podcast. And I'm curious if there's like themes that you hear from the most successful guests on this show. Like, is there anything that stands out as like, okay, it feels like the more successful people do these things, and the ones who struggle a little bit more, tend to do the opposite.
Yeah, there's one thing that jumps out, and you're going to agree with this too, and I'm sure it comes out on your show all the time, is just getting going. The amount of time between the day that you say, I want to be a real estate investor, and you actually close your first deal, the more successful people, that amount of days or years is much shorter than the guy that stands on the sideline waiting for the perfect opportunity. And that, we have a question of, we have the same questions at the end of every episode. And one of them is, what's one piece of advice you give to someone that hasn't bought their first property? And it's always along the lines of, just do it.
Yeah. Yeah.
So I think that's the biggest thing right there. And that kind of ties back to the comment before of time is your greatest asset, where it's like, I got a lot of people that right now it's 2024 and they're like in 18, 19, they're nervous because they thought the market was going to crash again. They're waiting, and they're like, and it's like, man, like all that you've literally lost out of hundreds of thousands of equity in making that delay versus just getting it done and figuring it out.
Yeah, those are great lessons. Yeah, it's interesting because I just went back. I was thinking about that exact same thing. I went back and just Googled real estate headlines from the last 10 years and just put in the year every year. And it was like, prices are up, but the crash is coming. The bubble's about to burst. Like every year it was like these fear things. And it's the same conversations I have with people today. They're like, oh, I've been seeing in the news lately, we're on the verge of this crisis. And so is this a good time to invest? And I've literally had that conversation with people since 2011 when I started, doing this full time. About how the market's any day now, it's going back the opposite way and it's a terrible time to invest. But if you think back, if you had owned since then, you'd be in a very, very good spot. And I think it's kind of the trend of real estate overall.
My conversation, I get that all the time. And it's always like, what's going to happen to the market? And I ask people all the time, how much money you got in your savings account? And they tell me some 50, 70, 100, 200, whatever it might be. Like the market's never going to crash because you times another million people have that in your account. In 2008, we were all in. Yeah. We were pissed if we didn't leave closing with a check. Like we were mad, like if we didn't get 100, 110 loan to value. Like everyone was so in at that time, and we were all upside down. So there's a lot of speculation. Any rental unit we had, we were either break even or down a couple $100. Like right now, that's not the case. There's plenty of. I didn't know what cash flow was until the market crashed. I told you before, like I was selling these condos and talking people into 100. You're upside down $150, selling them on the idea like, hey man, you just got to come out of pocket just $150 a month and we'll make money. I remember bringing that condo scheme to like a legitimate investor, and he's like, that's the stupidest effing idea I've ever heard. And I walked away that day thinking like, man, that guy doesn't know what he's talking about. But that's how ignorant we were before that crash. And it was many times a million people that were like that. And that's how you end up in that crash. And right now there's so much money out there, and rents continue to go up, and there's not houses to move. The building has, there's so many reasons why if your worst case scenario right now is things are just going to kind of level off. And here's the other thing. The market's never going to crash that far again as it did, because now you have all this private equity and all these hedge funds that are out there. Man, right now, if the market went down 10%, they'd have a buying spree on everything, all these hedge funds, because they like, that's great. That'll leverage out my purchases. And so you're never going to see things go down 30, 40% like that anymore, just because there's someone waiting for that to just trickle down just enough to swoop it all up at what they would call a discount. We call it like, all right, that might be fair, but that's a discount.
Yeah. Yeah. And have you changed the way you invest at all based on, this post-COVID era, like in interest rates going up and stuff like that? Or are you pretty steady on the same way that you've invested throughout?
So we've shifted. So I kind of have two fronts of where I'm investing right now. We started buying up industrial buildings 5-6 years ago, and now we're still trying to, if anything on the market side, we're trying to source off market industrial deals, and we have a couple right now we're raising some money for. But then I'm also, part of what I was talking about earlier, and this is a reason why I'm doing it, but I started buying these single family homes, 250 to 300,000 in Class A neighborhoods, because I call it as close as I can to the 1% rule as possible. Because I know that these little tiny, which most of them end up being these kind of 3-2 ranches with a basement out here in like Schaumburg, Downers Grove, Naperville, stuff like that. they're the bottom of the market. And when they build these new construction houses for 750,000, like that will pull those up. So those 250, 300 will eventually be, 400, 500, and the 2,500 rent I'm getting will be 3,500 in 5 years. And if I'm off a year or two, then I'm off a year or two. But like that's kind of what I'm going after now, looking at it. And a lot of it's just because of inventory, and call it. My daughter is just a freshman in high school. When she goes by a house, her first house, and it's that starter house. That starter house is not going to be under 450,000.
Yeah.
Like, by the time she gets out there.
Yeah.
So the whole time is your greatest asset. If I put these in here, and even if I break even, if I got a ride, if it went down 10% or some stagflation type problems we might have, like those will still be good, awesome 20 years from now. Like I'll never be. You know what's funny, Curry? I was talking with somebody the other day. I don't think I've ever walked out of a closing thinking like, "Damn, I paid too much."
Really?
I always feel like that, because you always feel like you could have maybe got a little more.
Yeah.
He accepted that too easy. Maybe I should negotiate a little harder. Like, usually it's always like, "Oh man, maybe." But in the end of the day, like that's so irrelevant, especially the whole other the write-offs. So you have income and the if you're locking in an interest rate for a loan right now at 7% on an investment property, like that's locked in then. So no matter what gets played with, and I don't think they're going to go down. If they go up, like it's just kind of locked in. So it's kind of a hedge against inflation. Like, so there's just so many opportunities to home ownership, especially now that I have other, for anyone that has W-2 income, like to offset that tax liability that I have is huge. And people don't recognize that because it's not cash going in and out of your bank.
Right.
It's something that your tax prepper does at the end of the year that you never really get to appreciate. And you should really understand those things.